In many African countries, personal debt is rising rapidly, often due to microfinance loans and high interest borrowing.
Welcome to the FAM Podcast, a podcast about finance and mental health, teaching you good monetary habits to increase your income and improving your relationship with money, all while helping you with your mental well-being. And now here's your host, Braimoh.
Hello everyone, Braimoh here. Welcome back to my channel. In today's video, I will be exploring a crucial topic, the price of money. We'll uncover the true cost behind our financial decisions and learn how to make choices that lead to financial freedom. Money is a tool that can either build our future or become a burden. The way we manage our money determines our financial well-being. Today, we'll discuss the price of money, the impact of debts, the illusion of high earnings, and the practical steps to achieve financial independence. We'll also touch on some key insights from Rob Dick's book, The Price of Money, which provides a comprehensive look at the economic forces shaping our financial lives. Let's start with the concept of the price of money. Every financial decision we make comes with a cost. This cost isn't just the sticker price, it includes interest rates, opportunity costs, and long-term financial impact. Understanding these costs can lead to smarter financial decisions. When you buy a car with a loan, the price isn't just the car's cost. You also pay interest over the loan's duration, which can significantly increase the total amount paid. Do you know the true cost of any purchase is not just the price tag, but the sum of interest payments and the opportunities forgone to make that purchase? This highlights the importance of considering long-term financial implications before making a decision. Think about the recent major purchase you made. Did you consider the long-term costs, such as interest payments, or what else you could have done with that money? Debt, on the other hand, can be a double-edged sword, where it can help us achieve certain goals like buying a home or funding education. It can also lead to financial strain if not well managed. The impact of debts on our financial stability cannot be overemphasized. In the UK alone, the average household debt, including mortgages, was around 70,000 in the early 2024. While in many African countries, personal debt is rising rapidly, often due to microfinance loans and high interest borrowing. Let's take, for example, a family taking out a high interest payday loan to cover unexpected expenses. While it can provide immediate relief, the high interest can trap them in a circle of debt that's hard to escape because of the interest rate is so high. High interest debt can quickly spiral out of control and lead to long-term financial hardship and mental health problems such as depression, anxiety, and fear. Have you ever taken out a loan or used credit card to cover expenses? What was your experience with managing repayments? Please share your comments. Let us see. We have to be very careful when we are making financial decisions. You want to borrow to buy the home, the car. What are the financial implications in 5 years, in 10 years? How much are you earning? Are you able to organize your finances within your household to be paying for a loan every month? Before you make that decision to borrow money, be very careful and think wisely. It is a common misconception that earning more money automatically means you are financially secure. High earners are not always rich, especially if you are burdened with high interest debts and extravagant spending due to lack of financial literacy. Imagine someone who's earning, let's say, £100,000 annually, but spending excessively on luxury items, vacations, and maintaining a high-profile lifestyle. If they are also carrying a high interest debt, they might be living paycheck to paycheck despite their high earnings. Such a lifestyle will put you in money problem. You might be earning high wages or salary, but your lifestyle is taking all that money away. For example, here in the UK, according to a survey by YouGov, nearly 40% of high-income earners in the UK report living paycheck to paycheck. You are earning good money, but you are not able to organize yourself. You are not able to organize your money, which means before your next pay comes in, what you've already earned at the previous month is almost already gone. What kind of a lifestyle is that? Guys, have you ever found yourself in a similar situation where high earnings didn't translate into financial security? Please share your experience in the comments. According to Suze Orma, it's not what you earn, but what you keep that determines your financial future. High income can often mask underlying financial instability if not paired with the good financial management practices. Opportunity cost, on the other hand, is another critical aspect of the price of money. It refers to the potential benefits we miss out on when we choose one option over another. Understanding opportunity cost can lead to a better financial planning. Imagine you have £1,000. You could invest it in savings account with a modest interest rate, good rate, or you could spend it on a vacation. The opportunity cost of the vacation is the interest you would have earned by saving or investing that money. If you understand the concept of opportunity cost, it will help you to make financial decisions better. What are some opportunity costs you've considered in your financial decision? Let us know in the comments. And don't forget to hit the notification bell so you never miss an update. Let's continue to make smart financial choices and build a secure future together. Remember, personal finance is personal and your mental well-being is priceless. Bye-bye.
Thanks for tuning in to another episode of the FAM Podcast. We hope you learned something valuable today. Be sure to subscribe wherever you heard this podcast so you never miss a future episode. And remember, health is wealth, and wealth is health. We'll see you next time.